got another informative week coming up, even if the number of FTSE 100 firms with scheduled statements is down to just 6. Now they include a trading statement from plumbers merchant Wolsey on the 6th, and analyst meetings at BT and Royal Bank of Scotland on the 7th and 9th respectively, and meanwhile other numbers to watch would include online grocer Ocado and controversial sporting goods retailer Sports Direct, and they both come out with statements on the 8th. It should also be worth keeping an eye on the European Central Bank's latest policy decision on the 8th, as markets wait for any hint from President Mario Draghi whether the €80 billion a month quantitative easing, or QE programme, will be extended beyond March 2017 or not. But for the update which could create the most fuss in the week ahead for me, well, I think that's going to be the interim results statements due from equipment rental expert Ashtead on Tuesday the 6th of December. Now it might not sound very exciting, hiring out everything from forklifts to earth movers to scaffolding, but the shares have done pretty well, as we'll see shortly. American subsidiary Sunbelt generates more than 90% of the company's profits, and the shares, having already done well, have gone on a real tear since the US presidential election on the 8th of November, and Ashtead has powered to new highs in the £15 a share range. I think personally, this enthusiasm can be attributed to three things. First, the election of Donald J. Trump as president. Roughly half of Ashtead sales in the USA are construction related, so the president-elect's reported plans to kickstart the US economy with big infrastructure spending projects, well, that could be a potential positive. Second, the dollar. Trump's plans to drive growth are seen as inflationary, and inflation could persuade the US Federal Reserve to raise interest rates for a second time or even more. That, in turn, could boost the greenback, which flatters Ashtead's earnings once they're translated back into pounds. This graphic here shows how Ashtead's share price and the sterling dollar cross rate, well, they seem to interact a little bit. Third, oil. Oil's rising again, back to nearly $50 a barrel, and those US shale drillers in Texas or North Dakota will need kit to help them drill. This third chart shows how Ashtead's share price and oil seem to relate, even if, of course, the past is no guarantee for the future, and correlation is not necessarily causation. So that's the big picture. As far as the first half numbers are concerned, well, September's first quarter numbers, on a reported basis, showed increases of 12, 15 and 15% in sales, pre-tax profit and earnings per share respectively, with the benefit of a weaker pound, partially offset by lower fleet disposals. Those figures seem a pretty fair benchmark for the first half numbers that we've got coming up, especially as analysts' consensus calls for increases of 15, 23 and 17% in sales, pre-tax profit and earnings per share for the full year. Also, as a final point, keep an eye on the dividend. Now, you might not think Ashtead's got much to offer here, given its forecast yields around 1.7%, but the company has increased this cash payment every year for the last 10, which is some record. At the first half stage last year, the dividend was 4p a share. Thank you for watching, and I look forward to seeing you next time.